Well, our next guest is here to talk about tariffs and their effect on this economy and the negotiations between our two countries, Canada and the United States. We're joined now by Lachlan Wolfers. He's leader of KPMG Law and joins us right now. Lachlan, thanks a lot for joining us. Let's begin with the signaling from the Prime Minister on this. Mark Carney is clearly telling Canadians to moderate their expectations on where negotiations with the U.S. are going, that a tariff-free agreement is unlikely. Where do you think this is going by the time this is finally over?
Yeah, good morning, Paul. Great to be with you. So I think if we start off from the proposition that President Trump is trying to set up the 1st of August as being Groundhog Day or Liberation Day, the sequel, I think if you look at where the US administration is at the moment, I would say that emboldened by the fact that for the first 9 months of the fiscal year, the US has raised over $100 billion of revenue from tariffs, and perhaps more remarkably, in the month of June 2025, the US achieved its first monthly tax surplus since 2017. So likely emboldened. And I think your observation that Prime Minister Carney is warming the public up to the idea to expect tariffs is absolutely right. It could also signal that a deal is relatively imminent as well. If we break it down a little bit, what we've learned so far in terms of where I think Canada could ideally get to in this situation. So the UK negotiated a 10% broad-based tariff, Vietnam 20%, and overnight we learned Indonesia negotiated 19%. So it gives you a little bit of a benchmark around where that sits. But if you actually look beyond the headlines, and you've got to recognise that you've got two different ways of negotiating here. President Trump's is very much to do that in public through social media. Prime Minister Carney's has been to do this in the background and to keep the negotiations largely confidential. The UK deal is instructive. What it says is 10% baseline, which I think is probably a best case scenario for Canada. It also says, if you look at it on the very first page, it's not a legal agreement, which is interesting. And then you look throughout the terms of the 5-page document, and there's a bunch of commitments and general promises, and we shall do this and we will consider doing this. And I actually think it's very much a strategy of trying to kick a lot of the can down the road. And I think that's probably a best case scenario for Canada. These are not broad-based trade agreements. These are narrow, constructed terms, the intent of which seems to be to deliver a great news headline, but there's not a whole lot of deal or substance that sits within them.
Okay, I'm going to give the next question to Brianne Gardner. She's a portfolio manager. She's joining us from Vancouver. Brianne.
Yeah, thanks for joining us, Lachlan. I think, what a lot of investors are comparing this to is a 2018-2019 version. And I'd love to get your thoughts on really the take on this tariff playbook versus then from a market perspective. We have seen a similar trend. We saw a sell-off market, V-shaped correction market hit new highs again. And then, choppiness and a few 7 to 8 sell-offs for the rest of the years as trade settles. And I see a similar pattern happening in the market. But what is your take on really any similarities or differences from what happened in the 2018, 2019 version for now?
Yeah, it's a great question, Brianne. So I think if we step back from it, this Sunday marks 6 months in office of President Trump's second term. And I think throughout that 6 months, we've seen a degree of chaos and instability and uncertainty from a tariff perspective. The question that I would really ask from an investor perspective is, do we have any reason to believe that the next 3.5 years will be any different? That's the first question. I'm not convinced, and I know I'm not alone in this, that markets have reacted in quite the way they need to from the perspective of what is likely to occur on the 1st of August. In other words, I think they have underreacted to this because of round one of the tariffs where they were pulled relatively quickly. And even dating back, as you said, to 2018-19, the tariff measures that were in place then were for a relatively short period of time. I don't think that's the case here. And I do think we've got to be looking at this as more of a longer term play. I think the second thing that I would say, and this is really important from a Canadian perspective, is Canada was relatively on its own in the sense of retaliating against the tariff measures. And there's a great quote from a famous UK economist, Joan Robinson, which is the idea that when other countries erect tariffs, we think it's sensible to do the same. And her quote is along the lines of, it's just as sensible to drop rocks in our harbours because other nations have rocky harbours too. It doesn't make sense. So I think the message from a Canadian perspective needs to be, how do we turn from defence into offence? And offence is not necessarily retaliatory tariffs. Offence is around how businesses can take active steps to mitigate their own tariff costs and to trade around this as effectively as possible. And what I've seen is the uncertainty in markets has created an environment where people haven't been able to engage in that medium to long-term planning. My advice is they now need to do that.